All right, David, you're on the radio show on KCBQ on Tuesday. Awesome segment. If anybody missed it, I hope they go to your website or ours and check it out. I mean, the way that you commented on the market moving up versus down based upon these reports, but also that monkey wrench that is the Fed and what they'll have to say about how they'll react. It really is a confusing economy. What do you think here? Explain it to our audience here today.
I think it's kind of good sports analogy here, halftime. It's like a good halftime report. The market is still near all-time highs, although we've experienced a lot more volatility, which I kind of anticipated. We're into pre-earnings season here, earnings season really this week. Earnings is going to be a driver of what's going to happen for the rest of the year. The market's been up to about 7%, now around about 5%. And you're going to look at if earnings outperform and look for revenue to increase, you're going to see the market hopefully continue to rise. But you could have the other thing happen and go the other direction, and you could look for that correction that a lot of people have been kind of looking for. It's kind of hard to have a correction when everybody's looking for a correction, though.
No
so that's one of the tough things. And secondarily, it's been quiet because we're not really in a political season. I've talked about this before, midterm election cycles. I think as we reach closer to the end of the second quarter, get into the third quarter, closer to November, midterm elections, you're going to see more volatility. You have had historically a 17% drop in the S&P 500 during midterm election cycles. So those are two big areas I'm concerned about. And also, again, we talked about it's been almost 3 years since we've had a 10% correction, which post-World War II, we average about one every 18 months. So we're quite overdue.
So 32 months since we've seen a correction, which obviously long overdue there. And then you'd also mentioned on the radio show this week that every, 6 years, you expect to see some sort of a recession, so overdue on that as well.
Yeah, that's average, of course, and averages it can be deceiving. But yes, about every 6 years we have a recession, and we're into 2008 to the recovery now 2014, or if you want to call it a recovery. And so they were talking on CNBC a little bit earlier about interest rates, and that's kind of the bogey. I know, Craig, you talk a lot about housing. And I hope for a lot of your real estate guests that interest rates hold. But, that's kind of the wild card. If rates kind of start to skyrocket and we see inflation, we see the Fed start pushing up interest rates, that will hurt everything from automobile sales to home sales. You've already seen oil with this Iraq situation kind of spike. So, there's a lot of stuff out there, and hope for the best, but prepare for the worst.
David, what's a good takeaway? What's a good action item?
Action item for sure. We're a retirement planning firm, so most of our clients are at or near retirement, so we're pretty protective of portfolios. Raise cash right now a little bit. The market's just been crazy. We've only had 5 times since the Great Depression of a 5-year run of over 100%. In 4 of the 5 times we had market crashes of 40% or more. So it's not the time to be really greedy. I would look for alternative investments. I've talked about this before, real estate investment trusts or investing directly in real estate. I think are great alternatives because they're not tied to the market. So we want to look for assets that are not correlated so you don't get devastated by a severe correction.
Love it. Great information. Just like we talked about on the radio show this week, I want to mention it again here today. David offers a free financial review. He'll take a look at your retirement, no strings attached. Typically, financial advisors are going to charge thousands of dollars for something like this. He can do this for a select group of our viewers here today. If you go online and email David through his website, there it is right in front of you, reyesplan.com. Email him, get a review, no strings attached. Good thing to do today when you have a market that is 32 months without a correction past an 18-month average. I don't think there's been a better time to do this. I encourage you to go to reyesplan.com. Thank you, David. Great report here today.